With war now escalating in Ukraine, people are wondering whether or not Bitcoin is a safe haven asset to go to. Well, the performance has indicated otherwise, but we'll make that discussion here with Alex Mashinsky, CEO of Celsius Network. Alex, let's talk about this. Welcome back.
Hi, David. Thanks for having me back.
Okay. The argument here is that Bitcoin is digital gold. This is something that a lot of people have been saying for years. It's not behaving like gold right now. Gold is up and Bitcoin's down today. In fact, I'm looking at the charts. We're at $35,000, $36,000. It's been trending down for months, of course, but recently the escalations in Eastern Europe have not helped Bitcoin's cause. Why has Bitcoin not performed well in spite of rising risks of war that's been brewing for weeks?
Yeah, so definitely, I think Bitcoin has not detached itself from the main markets, right? If you think about the stock market, if you think about a man walking his dog, right, his pup, and the pup is on a leash, the pup is trying to break out and run away, and the pup is Bitcoin, and the man walking is the stock market. The stock market still controls Bitcoin, right? And until we see a decoupling or see the pup break away, we're going to see those two markets go together. The marginal buyer or seller of Bitcoin is the same person trading Tesla or trading Apple or other things. And so basically the institutions and the hodlers in the crypto community are not the one dictating the price, but the marginal buyer or seller. And there are just too many of those people. You don't have that institutional support that you have in traditional markets. So I think it might take another few years for us to see that decoupling. But when we see it, you're basically going to start seeing that Bitcoin behaving as a safety asset rather than the correlated asset to the stock market.
I wonder what the Bitcoin or other crypto trading volume on your own platform, Celsius, has been like over the last few days, last few weeks, over the last 24 hours in particular. I would imagine, again, maybe I'm wrong, I would imagine that people are flocking to cryptos and DeFi now, Bitcoin in particular, because this war is a good advertisement for adoption, right? If you're in the Ukraine and you want to flee Kiev and you can't bring a bunch of gold with you, maybe you're concerned about your assets being frozen in your banks, you can just put your money in a USB in a cold wallet and leave, and you would still have your wealth with you. Is that happening right now? Are people doing that?
Yeah, so Celsius is a hodler's platform. It's a platform where people are mostly savers. We're not a trading platform.
Yes.
And we do see an increase, like you said, we see an increase in assets, mostly from younger people. When we launched the platform 4 years ago, our 18 to 34 age range was about 25% of the population. Now it's over 50% of our users. So it's definitely getting younger and getting more international, where more and more people overseas are picking up more crypto and see that as their savings platform. But for trading purposes, you can look at exchanges and you can see a lot of that volume basically increasing as you see migration of, again, traders leaving and institutions coming in, young people coming in and replacing them.
Let's talk about the market outlook then. So going back to what you said about Bitcoin being still linked to the broader equity markets, let's run with that assumption and assume that they're running in parallel. So we'll talk about the broader market's reaction to what's going on in Eastern Europe. Now, I know you were born in the Ukraine, so this is probably a very personal issue for you. What do you think is Russia's objective right now, and what do you think is going to happen over the next couple of weeks? And then we'll link that to markets.
Yeah, so obviously Putin is now just trying to prepare his legacy, right? He's worried or he's planning to reunite the Russia that he knew when he was a KGB officer, the USSR. I was born when Ukraine was part of the USSR. And he's willing to sacrifice lives. He's willing to go and change regimes for that. And that's what we're seeing right now happening in the Ukraine. Unfortunately, the West is not willing to commit people on the ground. They're only willing to commit economic, sanctions on Russia. And but I think what's going to come out of this is that the West is going to unite. because of these actions. Countries that thought that they could run on their own are going to realize that they need the West, and especially the United States, much more than they thought before. And because of that, you will see a strengthening of the dollar, and you effectively seeing an extension of the empire, the United States empire, and the US dollar as the reserve currency of the world. These events are empowering the West, empowering the United States, and all of that is obviously good for America.
I'm going to come back to that statement. That was a very important point you just made, the strengthening of the dollar. Okay, I'm reading headlines everywhere. Why are sanctions not working? Biden threatened sanctions yesterday, or 2 days ago, when Putin announced the recognition of 2 breakaway regions in eastern Ukraine, yet he still moved into Kiev. Why did sanctions not deter Putin from invasion?
Well, Putin's source of power is high energy prices. And until we deal with that, until we actually create more energy, either by creating a safe nuclear power, by putting more renewables, by allowing drilling and other types of fossil fuels, we are effectively not going to solve the problem. And the Ukraine is just the first country. Just to remind everybody that Hitler also tried to unite all the German people and invaded several countries with exactly the same argument that Putin is doing in the Ukraine. So if we want to solve the Putin problem, we need to lower energy prices. And to do that, we need to basically allow much more competition, allow much more development of different energy sources that will bring down the price of oil.
There's a big green movement going on in the U.S. You're obviously aware of this. It's difficult to convince, I guess there's a lot of lobby groups going on, but I guess it's difficult to convince industry that now is a good time to increase their shale and fracking production, right? Or that's still going to happen?
Well, I think a lot of those people are going to revisit their assumption after seeing what happened here. And I'm all for a green planet. Celsius is an example. All of our mining is carbon neutral, and so on. So the two do not have to be in conflict. And I'm all for carbon neutral energy production. And there's many technologies that enable you to do that. But until we have enough of that carbon neutral production, we cannot shut down or eliminate the traditional sources, because what happens is that we're empowering dictators to do their bidding. And obviously the consequences of that are going to be tens of thousands of people dead all over the world.
One more geopolitical issue, and we'll move on to markets. People are saying now that because Russia has gone basically into Ukraine without any opposition and pushback from the West militarily, China is next. China is watching the situation very closely and perhaps can be emboldened by the West's lack of action. And now China could be possibly eyeing Taiwan as a target for invasion in the coming years because the West is doing nothing about Ukraine. Is this something that you're watching for?
Well, I don't think, first, the United States did not have a treaty with the Ukraine to defend the Ukraine. The Ukraine was not part of the NATO, but the US does have a treaty with NATO, with Taiwan. So I do think that those are two very different situations. Also, China is much more reliant on the West in terms of exports, in terms of financing, in terms of cooperation. Russia is actually much less reliant on the West, so sanctions work much better on China than they work on Russia. So because of all these things, I don't see China taking the next step and invading Taiwan. But the fact that Putin flew and met with the leaders of China before he decided to make this invasion tells me that he did coordinate with China to make sure that China is one of the largest users of natural gas and of oil from Russia. And he wanted, they recently, I think a year or two ago, signed a $400 billion deal to supply oil for 20 years. And I'm sure that he cleared his invasion with China before he pressed that button.
No, that's an excellent point. I'm just reading articles. For example, this headline from Reuters: China rejects calling Russia's move an invasion, urges its citizens in Ukraine to stay home. So China is taking Russia's side on this issue. Let's link this back to the market. So you're talking about maybe a shift in regime in the Ukraine, maybe a prolonged conflict over the next couple of weeks. How do you think the stocks in the U.S. and abroad are going to react to this?
So we've seen basically that all of this is already priced in. This morning, 7 a.m., the indexes were down. I think the Dow was down 800 points. And obviously, we recovered most of that during the day. That tells you that the stock market already accepts the overthrow of the regime in the Ukraine as a fait accompli. And because of that, I don't see the rest of this cascading of events in the Ukraine as having any additional impact. So I do expect the price of Bitcoin and the stock market indexes to have seen the lows at around 6 or 7 a.m. this morning. Now, those will be the lows to measure against for the next few months.
Bitcoin,
none of these, the conflict doesn't really affect Apple or Google or any of the companies that are leading the charts in the stock market. And because of that, I think we've seen the bottoms.
Well, what about Fed response or central bank response? ECB, Federal Reserve, Bank of England. How are they going to respond? There's economic impacts in Eastern Europe. Is that conflict going to affect the U.S. and the West? You think, in terms of economic growth?
Yes. So central banks got very concerned about inflation. They kept telling us inflation is transitory, and then they realized that maybe it's not. And they were basically trying to slow down the economy. Well, Russia just slowed down the world's economy, right? Anyone who was thinking of taking large risks, any business manager or
Sorry, how did Russia slow down the world economy?
So by invading the Ukraine, Russia effectively put at risk, or they created a lot of uncertainty with global activity, meaning every CEO of every company now has to think about, well, what if Russia invades another country? What if Russia is in a prolonged war in the Ukraine and the US has to intervene, or the NATO has to intervene, and so on? So all these things create uncertainty. They create less willingness of banks and financial institutions to lend. That slows down the world's economy. And that's exactly what the Fed and other countries' central bank were trying to achieve. They thought that we were running too hot. Right. And that's why they're going to raise rates. So it doesn't mean they're not going to raise rates. It just means that instead of 7 raises that we were expecting, many were expecting this year, we're probably now down to 3 or 4 raises, which is going to get us to that 1.5% to 2% level. And the Fed is probably going to stop there instead of going higher.
Let me give you a counter idea, Alex. Let's see if you agree or disagree with this. Russia's invasion of Ukraine could push energy prices up even higher, above $100 a barrel for oil. That might in turn make inflation go higher, which is going to prompt the Fed to raise rates more quickly. Because if inflation doesn't go down from 7.5%, if energy goes up, inflation goes up to 8 or 9%, they have to raise rates, right?
So oil is a much more flexible commodity, meaning Saudi Arabia can add 2 million barrels pretty easily if they wanted to. The United States can add 2 million barrels if they wanted to. Remember, when we stopped fracking, when we stopped exploring, we capped all those wells, right? It's not like we basically buried all of that, right? So we can actually bring back a lot of more production, which already is happening with, the old saying, the cure for high oil prices are high oil prices. So we're there right now. And I think the United States should release some of the petroleum reserves that we have to basically put a lot of pressure on Russia in a massive way, right? We should release maybe 100 million barrels or something like that, just to show Putin that we can hurt him where it hurts the most. And unfortunately, again, we're looking at sanctions instead of looking at curing the source of all this evil which is high oil prices.
Let's go back to Bitcoin. You mentioned something very important to me earlier, that this whole situation is going to shed light on the strength in the West and perhaps bring the West together, which is good for the dollar. We can expect a strengthening of the U.S. dollar. How is that going to affect Bitcoin? People are talking about the U.S. dollar potentially competing with Bitcoin as reserve currencies. Down the line, if the dollar strengthens, would that be bad for Bitcoin?
Well, I don't really agree with the people that think that Bitcoin competes with the dollar. Bitcoin has its own adoption curve. The number of people adding or exploring or joining Bitcoin is increasing every day. And it's just going to take a long time for the crypto community to get to 1 billion people. It's not going to happen tomorrow.
Yes.
But the fact that you have capped supply, there's never going to be more than 21 million Bitcoin, and you have growing demand, basically tells you that over a long period of time, the price of Bitcoin is going to increase. So if right now the prices are low at $35,000, that's a great time to average in and add to your position. That's what I'm doing. And you just have to be patient. And over time, the price of Bitcoin will increase because more and more people are going to use it.
Okay, and just going back to the price, you mentioned that this is possibly the bottom for us, $35,000, $36,000.
Yes, I think for this conflict, this is the bottom. We have very strong support at that 30,000 level. I think I was at your show just a few months ago when we were there, and you were asking me if we're going to go much lower, and I said I think we're going to hold the 29 to 30,000 levels, and I think today we're going to hold the current levels and go higher because, again, all the people that were on leverage got flushed out. All the traders who wanted to get out, considering the bad news, already sold.
Yeah.
Crypto does not have as much leverage as people think. When those people sell, there's only buyers who are left, and that's where prices will go higher.
Okay. All right, let's talk about Celsius and DeFi. You recently launched Celsius X. Tell us about that.
Yeah, so Celsius became famous for building a bridge between TradFi, traditional finance, and CeFi, right? We basically made it really easy for people to open a wallet, transfer their assets, earn yield, take a loan. And now we're building the second part. We're building a bridge. We just launched a bridge between the CeFi part of Celsius and DeFi, the whole DeFi world. So CelsiusX.io is the website if you want to learn more about it. And basically what we provide is the ability to unite many, many different blockchains and take any asset that, for example, Bitcoin only operates on the Bitcoin blockchain. We can now enable it to run on Polygon, to run on Ethereum, to run on Cardano, and so on, which unites the pools of liquidity across all the different blockchains. So instead of isolated blockchains, now we pull them all together, we connect them all together and provide liquidity across different blockchains.
And you told me offline you recently recruited the former CFO of Royal Bank of Canada, one of Canada's largest banks by assets. So congratulations. Tell us about that move. You're clearly expanding into new demographics, right?
Yeah, so it was great. Again, if you want to build this really big bridge from TradFi to CeFi, you need people from CeFi and DeFi, and you need people from TradFi. So Rod, who joined us recently, also follows other top executives that we brought in from Citi and other institutions. And together, I think Celsius has the strongest team in crypto. And we plan to use that to build these bridges and make it much more safe and much more palatable for people to deploy their assets in the crypto community.
Are you not concerned about competition from, not now, but down the line competition from traditional finance, like Royal Bank, for example, because they're probably thinking, okay, we're losing our top executives to Alex Mashinsky, and not just you, but a lot of DeFi firms are now recruiting from TradFi. And so they're probably thinking, okay, it's time to make inroads into cryptos. Let's not live in the past. A lot of investment banks are now trading cryptos, but let's open up platforms like Celsius. They have the infrastructure to do that. They're not doing it currently, but in the future they could, right?
Yeah, look, I think the banks have very profitable franchises, and it's going to take them quite some time to basically lean on crypto. I think crypto today is too small of an asset class to really make an impact for Royal Bank of Canada or JP Morgan or any of the other big guys. So while they look at it as a threat, they're not yet seeing it as an opportunity. And I think it's going to take a few more years for them to see it as an opportunity as the asset class grows. And then we hope to be their partner, because these are muddy waters. It's not easy to just jump into crypto. And you're going to need to have a good partner. And guess who they're going to call when they're looking for a partner? They're going to call people they know, people that they can trust. And there's very few people like that right now in the crypto community.
Final question, I'll let you go. I always ask you for a price prediction. I'm going to frame the question a little bit differently today. I'm getting the sense from the crypto crowd that sentiment right now is a little bit poor compared to last year. Headlines like this, for example, on CNBC, next Bitcoin bull run won't happen until end of 2024, says top crypto exchange co-founder. This is Du Zhang, co-founder of cryptocurrency exchange Huobi. Huobi. So the people, even in the crypto space, are skeptical of an immediate bull run. They're saying this is going to stall for the next 2 years. But this guy's saying 2024. What's your sentiment like?
So again, Celsius is not an exchange. And I can tell you that we have a very fast growing community. Yeah. Our community just keeps adding assets. They're not selling. People on exchanges might be selling, but people at Celsius are buying more and more coins. So from my point of view, from representing 1.5 million Celsians who hold almost 20 billion in assets, I can tell you that I completely disagree with what he is saying. Okay, so we'll expect a bull run sooner rather than later. Thank you very much, Alex, and we'll have you back on to follow up on what Bitcoin's doing over the next couple weeks. Should be interesting. Thank you. Thanks, David.
And thank you for watching Kitco News.